Ladies and gentlemen, good day and welcome to the Q2 FY24 earnings conference call of Shemaroo Entertainment Limited, hosted by Velaram Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal, CEO at Velaram Advisors. Thank you, and over to you, sir.
Hello everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Velaram Advisors. We represent the investor relations of Shemaroo Entertainment Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Hiren Gada, CEO, Mr. Argo Chakravarti, Chief Operating Officer, and Mr. Amit Haria, Chief Financial Officer. Without any further delay, I request Mr. Amit Haria to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and good afternoon, everyone, and welcome to our earnings call for the second quarter and first half of the financial year 2024. Let me first start off by giving some of the key financial highlights, after which our CEO, Mr. Hiren Gada, will give you some of the operational highlights. For Q2 FY24, the revenue from operations stood at 199 crores, which witnessed a growth of around 36% on a YOY basis. EBITDA for the quarter was around 17 crores, representing a growth of 121%, with EBITDA margins standing at 8.65%. And net profit was reported at approximately 5 CR, with PAT margins standing at 2.45%. For the first half of the financial year, the revenue from operations stood at around 352 crores, representing a growth of 45% YOY. EBITDA stood at INR 25 crores, which was up by around 19% YOY, and EBITDA margin stood at 7.08%, while net profit was INR 3.6 crores, with PAT margins standing at around about 1%. With regards to new initiatives, in Q2 FY24, the expenses amounted to about 30 crores, while for the first half of FY24, it was about 43 crores. And if we were to adjust these investments, the adjusted EBITDA from existing operations in Q2 and H1 would have been approximately 47 crores and 68 crores respectively. With regards to traditional media and digital media division highlights, digital media revenues for the second quarter stood at 63 crores, marginally down by 2% YOY while for the first half of the financial year it was around 120 crores, witnessing a growth of around 7% YOY. Traditional media revenues for the second quarter stood at around 136 crores, which grew by around 65% YOY, while for the first half it stood at 232 crores, representing a growth of roughly 78%. Now I would request our CEO, Mr. Hiren Gada, to brief you on the operational highlights for the period under review.
Thank you, Amit, and good afternoon, everyone. During Q2 24, the company achieved robust revenue growth and maintained a positive margin, largely due to the strong performance in the traditional business. Overall, advertising demand remained subdued due to sluggish consumer sentiment and a persistent slowdown in funding for new age advertisers. In addition to the above, the company's digital business was also impacted due to higher base effect in the same quarter last year. The festive season is expected to bring in slight upswing in advertising spend. However, prominence of major cricket events during this quarter is likely to absorb a significant portion of the advertising budgets. This, along with the continuous investments in B2C initiatives, is expected to keep the company's margins under pressure. On Shemaroo front, we released 11 new Gujarati titles during the quarter with content across movies, web series and plays, including digital world premieres of blockbuster movies like Shubh Yatra, Kutch Express and the release of original web series What the Fakra. We also launched the OTT platform in Indonesia via Excel. On YouTube front, with 66 million subscribers, Shemaroo Filmi Gaane is the 23rd most subscribed channel in the world. In Q2 FY24, we launched original programs across our 3 broadcasting channels, Laddu Gopal on Shemaroo TV, Gauna on Shemaroo Umang, and Jogeshwari Pati Bhairavnath on Shemaroo Marathi Bana. Shemaroo GEC channels have a viewership share of around 7.4% in the overall Hindi GEC genre. We also launched a new DTH service, Bollywood Masala, with 90s movies, Bollywood 90s movies on Tata Play in September 2023. By launching Shemaroo Verse, we are now present in the official Metaverse platform on GeoDive VR headset and are now officially present on the Web 3.0 platform. In regards to the ongoing GST case, the matter is sub judice. However, we would like to update the following. The case is primarily related to transactions of FY17-18, 18-19 and 19-20. The company is of the opinion that there is no offence committed by the company and the input tax credit that is claimed by the company is proper in all respects and is in regular course of the business. Further, the company denied the claim demanded by the GST department and the same will be contested by the company as the company believes that all statutory dues and compliances have been duly paid and filed by the company. Further, the company also submitted due records asked by the GST officers and deposited rupees 12 crores under protest with the department and cooperated in their ongoing investigation. With that, I open the floor for question and answer session.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good afternoon, everyone. Am I audible?
Yes.
Yeah. Hi, Rentai. So the first question is, I think in the last quarter we had indicated that because of the rebasing of the viewership share on the bar, I think the ad rates were, slightly lower than expected, and the demand was also subdued. So with festive season setting in, do we see any increase in ad rates happening for us? And continuing with that, since we continue to invest in original content and eventually want to take it to 4-5 hours in each of the channels, if the ad rate increase does not happen, will we kind of revise our investment guidance of 75 crore going forward for the current year?
Always.
Yeah. Hi, Dhwanil, this is Raghu here. Let me answer the first part of the question. I would say the festive season is just upon us, and the last quarter had seen, if you look at the way in which our ad rates have moved, I will not give out the exact numbers, but there has been a positive movement in the ad rates in the last quarter compared to the previous. Having said that, it is also a function of our channel maturing, and some content sticking with the consumer. In terms of the festive, we hope for a better ad market, but the ad market continues to be not to the best as in terms of what we expect. So it's very difficult right now to comment on exactly how things will pan out in till the end of by the end. In the month of October, we saw some improvement, but again, I think it has largely been muted compared to expectations. Having said that, going forward, we will continue to build our channel, and our investment in original programming will continue. And we hope it's a matter of time before ad rates start normalizing, and that is not going to in any way impact our decisions on investment. We will continue to build our channel. As Hiren spoke in his opening comments, we did launch 3 original content in 3 channels. In fact, Shemaroo Marathi Bana was our first original GEC content. In fact, our second original has just started some time back. So that investment will continue, and we hope that rate will keep improving. However, as of now, the outlook seems to be a little muted compared to what our expectations were.
I will add one couple of points to the question. This rebasing of the universe, actually, which was your question, that has more impacted. Of course, it has impacted to a good extent the channel share itself, and that therefore affects the ad rate. That in a way we feel has now in this quarter stabilized the rebasing part of bar. Second is to further add to Agho's point of on original. While we are fully committed to build the channel and grow the original pipeline, we definitely from time to time do take tactical calls in terms of if a show is not delivering and performing. We have been taking those calls of pulling it off and taking it whatever. I would say take a step back and then come back. So there is a clear strategy that we will. The intent is not to. The intent is to keep a hawk eye on the investment cash flow and the financial impact of that also. So to the last question that you had on investment, I think so. Right now we will hold the projection or the expectation of 75 crore. And we are hopeful and that we should be able to manage within that. I don't want to. I hope that there is no overrun on that. There could be, but we will try our best to retain that 75 crore investment.
Right, because I think till last call, I think Hiren bhai, we had kind of said that we will be well within that number. And I think today probably we are saying that we may even kind of surpass that. So is it because the revenue growth or the ad rate improvement is not up to the level and
the market has not supported to an extent? That has been one of the challenges, which has that the overall spends in the market, the ad revenue itself has been muted as far as the industry is concerned, and therefore to that extent the projection on the revenue has come off, has been a little lower. And for us the question was that therefore should we continue the investment or not? And I think having invested, we don't want to pull back now because that will set us off back by at least 12 to 18 months. So therefore we've kind of, as I said, within that taking tactical calls of pulling off shows which are not working, but still directionally we are committed to the path.
Okay. So second question is on the balance sheet side. I think at the start of the year we said that one of the key KPIs for this year is to reduce debt by 30 to 50 crores. So last quarter we reiterated that. Are we kind of staying firm on that this year?
Yeah. We are committed to, in terms of our, this is what we have intended to do, and as of now, we are fairly confident that it should happen. And we had indicated last time also that some of the cash flow investments, so a lot of this will be back-ended to the second half of the year.
Right. Okay. And last, and I'll come back in the queue after this question. So this 12 crore amount that we paid to the GST, so that is not appearing anywhere in the P&L and cash flow. So it is after September 30th that we have made payment.
No, it would be appearing in the balance sheet item as an advance paid to the government authority.
This is under protest. There is actually no demand raised by the department as of now.
It would be standing in the asset. So we had an input tax credit of around 10 crores. We have been paid from the same. So it is just from one account to another account. It's shifted.
Okay. So there is no P&L impact of this. What do you think?
As of now, no.
Okay. But cash flow, it should have been impacted, right? So cash flow is lower by that extent is what we should believe.
Yeah. So if we look at the full year, it will play out that way. It will be lower by that extent. In the immediate, it was a credit lying in the account, but that credit would be consumed in the rest of the year, and to that extent, the cash flow will be lower.
Okay. Okay. I have more questions. I'll come back in.
Sorry. Thank you. The next question is from the line of Yogesh Bhatia from Sequent Investment. Please go ahead.
Hello.
Yes.
Sir, actually, I'm new to this company. I wanted to know on our slide number 4, we have mentioned that profit and loss includes new initiative expenses of 426 million. So this is what we are talking about, the 75 crore budget that we have made for the new initiatives, correct?
Sorry, which slide are you referring to?
On the slide 4, there is a small note which says, first half FY24 profit and loss includes expenses on new initiatives, net of revenue 42 crores.
This is the 75 crores we are referring to. Yes, you're right.
This is the 75. So this budget has been made for FY24 up to 75 crores, correct?
Yes, yes.
Okay, but and going forward, how is this going to be in FY25-26, or that call we will take as and when?
That call we will take on a year-on-year basis based on how these initiatives progress and their respective annual operating plan for those years. So right now we haven't yet made those plans for FY25.
Okay, sir. Thank you. That should be all, sir.
Yeah,
Thank you. The next question is from the line of Yash from Equity Capital. Please go ahead.
Thank you so much for the opportunity. Am I audible?
Yes.
Yes. So my question is regarding the growth in the traditional media. So, sir, as we have observed 78% YOY increase, so sir, in Q2 FY23 we had 3 channels, right? And now we have 4. So I wanted to understand the comparison of growth, like how much have these 3 channels contributed and how is the new channel contributed? That is my first question.
Okay. So firstly, last at least two to three calls we have been alluding to the fact that this year's growth will be largely driven by traditional media itself, and various reasons, of course, new channel launches, etc. Two things I would say here. One is, of course, so it's difficult for me to give that breakup, but one of the things is, for example, last year Umang had just started monetizing in July, and so we didn't have a full-blown Umang monetization in last year's base. So that is one of the things. Even Chumbak has started this year, so in this quarter we have partial revenue of the Chumbak channel. In fact, Orgo wants to add some points here. So
let me answer that, Yash. So the new channel, the 4th channel which has been launched this year is just about 2-3 months old, and it's in the nascent phase. We are still figuring out the right combinations and so on and so forth. So while exists in the base, but that channel's revenue right now is too small to really contribute to the large part of the growth. A significant part of the growth has come in the existing channels itself.
Okay. Yeah, got it. And so my second question is regarding the viewership. So, sir, our viewership now stands at 7.4%, and our target is to reach by more than 15% by 2026. So, sir, I wanted, so are we still on that guidance?
Yes.
Yeah. So that is, of course, an aspiration that we have put out.
Yeah. It's an aspiration, and it is a target that we are chasing internally as a company. Of course, it will depend on various factors in terms of how the market plays out and so on and all that. But in terms of putting in the right inputs, see that viewership share is finally an output metric, right? I mean, an output metric is a function of various things, competition, X, Y, Z, and all that. But in terms of our own, and we're clearing the target for sure. That's an aspirational target we're achieving. But in terms of putting in the inputs to have that kind of a share in the future, in terms of as Dhiren said in his previous answer, if you would be correct, we are taking prudent calls. We are very, very carefully monitoring shows. We are adding shows. We are also changing shows. So there is a large focus on increasing the content as well as selecting the right content. So yes, so while it is at 7.5 today, and we are aspirationally chasing the target of 15, that number continues. But in terms of our inputs towards achieving that number is consistently going on quarter on quarter.
Okay. So my last question is, as our viewership was 9%, now it is 7.4%. So, sir, how is it impacting ad rates, and what is the outlook for this?
So, yes, the ad rate is a function of two things. One is obviously your viewership share, and in terms of your position in the entire network, and also it's a function of what is the demand in the market, right? It's a function of two things. So while yes, our viewership share is at 7.4%, but we have also seen a steady, as I said, as I would have recovered in the first question, that there was a rebuilding of the universe. So that resulted in some initial changes in the viewership share, but that has not stabilized. So we have gone past that, and now the ad rates are function purely of, in terms of what the demand in the market is. We have seen, as I said in my first response, the slight increase in ad rates, but going forward, it will all depend on how the ad market pans out. So that's what the impact on the ad rate is.
I would add also, Yash, is that the rebasing effect, if we have to put it, it's probably between 50 to 100 basis points of market share, viewership share loss because of the shift away of the free FTA audience to the pay audience. So in that sense, we are not very much off from where we were, a year back. So we are broadly in that similar ballpark. So in that, for that, therefore that input side of the metric on viewership share is not so much off, is what I would say. And of course, the market share, demand is the major question.
Okay, got it. Thank you, sir.
Yeah.
Thank you. The next question is from the line of C.A. Nihar Shah from Crown Capital. Please go ahead.
Hello, sir.
Yeah.
Good afternoon.
Hi.
Yeah. Hi. Yeah, I'm fairly new to the company. So can you please help me explain the new channel plan, if it's possible?
Sorry, your voice cracked. Can you just repeat the question?
Yeah. I was just saying that I'm fairly new to the company. So can you please help me understand the new channel plan going forward?
Okay. I'll actually give you a little history. So we launched this business we launched in January 2020 with our first channel, Shemaroo Marathi Bana. And then right in the middle of COVID, so we had launched a test signal for Shemaroo TV, which is our Hindi channel, which is our flagship channel. And March 2020 was when we had launched the test signal. And the channel itself got launched in May 2020. In the middle of the lockdown, post which 2 years period we stabilized. Of course, COVID had hit us and ad revenue itself had not kicked in and things like that. So it took us 2 years to stabilize all of that, and April 22 was when we launched the third channel, which is Shemaroo Umang, which is also a Hindi GEC channel. And this year, May 23, is when we launched our fourth channel, Chumbak TV. So in terms of indication on the way forward that we have given at the beginning of this year itself is that there is one more channel in the pipeline, which is likely to be launched in the second half of the year. And right now, we are not able to give a further guidance beyond that. In this financial year, there is one more channel that is planned to be launched.
So we'll have to wait for a couple of months for us to come back on that.
Okay. And one more small question. I just read that company aims to capture around 25 lakh subscriptions for Shemaroo Me. So what numbers have we reached till now, like in case of subscription?
I mean, where have you read that? Because that we have not put that out anywhere.
I found it in the note of last Concall, but it's fine. No problem. Sorry.
Okay. So that may have been just a derivative way to derive at what could be a potential addressable market kind of thing.
Understood.
So short answer to that is, to your question is that right now we haven't put numbers out for Shemaroo Me. All we can say is that the viewership, the mind share and overall share in the Gujarati market that we enjoy is tremendously high, and we believe we are literally the single largest player in the Gujarati segment on the OTT business. And once the business reaches a certain critical mass is when we would be sharing more data on the numbers and things like that.
Understood. So one small question is, would you like to give any outlook for H2 going forward on the console basis, like entire thing, for top line and EBITDA margin?
So, I mean, we don't give guidance, but indication we have given in the operational highlights itself that, and I'll reread that, festive season is expected to bring a slight upswing in advertising spend. However, prominence of major cricket events during the quarter is likely to absorb significant portion of the advertising budget. This, along with continuous investments in B2C initiatives, is expected to keep the company's margins under pressure. This is the overall outlook that we have given. But to give a slightly different flavor, I think last 3.5 years we have been investing in building the B2C businesses. We've actually, if you add up everything, we've invested probably close to 225 crores in our B2C business initiatives in the last 3.5 years. And that, if you see, the impact has already put us on a firm growth path. So we have, even in FY23, we kind of bounced back strongly from on the top line side, and that trend continues in this first half also. And along with that, we have so there's a major business investment that has happened. Second major investment we've done is in the people side, in terms of bringing in thoroughbred professionals and putting in a lot of systems processes. In fact, the whole professionalization aspect, which is separating ownership and management right from the senior leadership down, that has been another very major investment that we have done over the last about 15 odd months. which is now you can see, playing out in terms of many of the metrics. And this is a trend that is, we are, not only we are committed, I think it's irreversible now for us, and this is, something that we know will be a very important driver of future growth. So I think this whole combination of business investment, B2C side investment, people investment, etc., is what will we expect, put us on a significantly faster growth trajectory.
Okay. All the best, and thank you.
Thank you. The next question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Yeah. Hi, Virendra.
Hi, Viraj.
Hi. The first question is on the digital thing. Our revenue has significantly come off in terms of growth that we saw post-COVID, and that is probably understandable. But now it has started flattening out or declining. So where is this happening? Is our YouTube suffering, or Shemaroo, we are not getting new subscriptions? Where is this entire this quarter we are down 2% on a YOY basis, not even on quarter-on-quarter. We only started at 62 crore a quarter. So can you please elaborate on that?
Yeah.
Okay, let me take this over here. So I think there are two issues. I think one, which Hiren touched upon in his initial statement. This quarter there is a one-off base effect. A certain adjustment that happened last year in this quarter. So I think there is one impact of that. But however, if I just pull back and look at it differently, there are other issues as well. I think YouTube as a platform, there is a bit of a stress on the platform itself. As you know, in YouTube we enjoy a significant amount of share. We are a serious player in the YouTube ecosystem. And overall, there is a bit of pressure on the views. So what is also happening is there is a shift of views happening from the long form video to short form. So that is is playing out big time in the overall digital marketplace. Also, we have a reasonably strong base of Facebook in our business, and that platform has not. While our view market shares, our view shares in Facebook remains at an all-time high, but that platform is has not been delivering the best in terms of overall views for the platform itself. So these are the two things. In terms of Shemaroo Me, I don't see any changes. Shemaroo Me is doing well even on this quarter. And thirdly, I think overall, there's a continuous erosion of I think advertisers, new age advertisers, which impact the digital business. So if you look at the YouTube CPMs also, there was quite a bit of stress, in the second quarter, which seems to be reviving a little bit as we go forward. But these are the 3-4 reasons, for which Q2 has been a bit of a soft, has softly played out in the digital business. I don't think the negative will continue. We should be on a growth trajectory, hopefully, in the next quarter. But so that's what it is. I mean, it's a combination of 3-4 things.
Sorry to harp on this a little bit. A longer-term strategy question on this is, with some of the platforms like Hotstar and even JioCinema, they're becoming free. As in Hotstar, you can access matches for free. JioCinema is free. So with some of these platforms becoming free, Netflix reducing their prices, is it a time that it will start? It has put a lot of constraint or a lot of competition for free views, which is essentially YouTube for us and Facebook for us, because people have newer avenues of entertainment for free which were not there earlier, which means either then we have to be present there, or otherwise the platform as a whole, like a YouTube and Facebook, will start losing clients and views.
See, because that is largely a question actually for YouTube and Facebook to actually solve for. And there would have been definitely some impact, but if you look at it, in the last quarter, there were not really too many events. I mean, going forward this quarter, for example, there's a World Cup which is happening free. So it has an impact not just on views, but it will also impact on the ad budget, right? So added projected, for our, as we have given projection, I mean, the outlook that we have given, where we have talked about, that some part of the advertising money for the festival will actually will be absorbed by the cricketing event. So, those kind of stuff is there, but also remember, those platforms are also gravitating towards short form. So hence, it is not complete, while some part of what you say may be playing out, but I don't think it isn't completely that would be the case. There's also a movement of long form to short form in those platforms.
Also, I would just add, Viraj, a couple of points here. I mean, while sports, is a very big viewership driver, sports is event-based. So we don't have, such a big event calendar ever in sports or cricket rather that will, absorb the consumer's time and viewership throughout the year. And that is the fact even on television. I mean, sports on television also commands the overall viewership share of between 5 to 8% only. In spite of it, at a match level, it is, it will be the highest viewed event on that day. But when you normalize it over a full year period, that comes down to less, in less than 8% or thereabouts. So I believe, that would also be the case here, because the need for entertainment, the fact that there are, whatever, few 100 million people logging into various entertainment platforms on a daily basis, that need, is there every day, irrespective of whether there is a sporting event or not. So to that extent, I don't think that, this really is the case. Yes, this gravitation towards shorts, and we in fact have a very, very strong play on the short side. We continue to maintain. In fact, actually, we have higher viewership shares on the short side on both YouTube and on the Facebook, Instagram kind of platforms. But the monetization model over there is yet to fall in place. So for many of us, this is on that side of the thing. It's more of an investment story where there is a strong investment. There is a certain amount of viewership gravitation happening over there, but the monetization, it will probably still take a few quarters to kick in itself, and then we'll see how it's playing out in terms of current versus. So if I have to, Viraj, summarize, actually, I mean, these are all passing phases from time to time, where few factors converge and give a impact of low or no growth or those kind of things. The trajectory of digital growth will continue to remain higher. However, and this is something we have shared in last few quarters calls also, that we expect that the trajectory will now be lower in terms of, I mean, those gone are the days of those 20-25% kind of growth rate, because the base effect is very high now. We all read about the fact that digital spend advertising, overall digital advertising has surpassed TV and all of that, right? So the digital spend from here onwards is going to be a more normalized story. And with our viewership shares on all these platforms, I think we are fully geared to participate in all of that and actually do better than what the industry grows. So that I don't think is an issue.
Right. And my last question, Arunda, is if you remember at the start of the year, you had mentioned that we'll reduce the debt by 40-50 crores. Now our debt is up by 15 crores. So if we have to stick to that guidance, we have to reduce our debt from here point onwards, from September onwards, by 50-55 crores, net of investments, which would mean our existing business, X of investments, has to generate a cash flow, even if it is 30 crore burn of over 6 months.
Viraj, I got your point. I have just replied to Dhanil also on the same, and I will, so firstly, two corrections I want to make. 40-50 crores is not what we had said, 30-50 crores is what we had said. Secondly, Q1, which is June quarter, the debt was at 341 crores, which we at that time shared is that we believe this is the peak. From 341, we've already come down to 332, which is higher than what it was in March. I understand that. As of now, we are holding that this thing, and something we had said at that time also, that this will be back-ended, not in the first half, because there is a channel launch and other investments in the first half of the year. So we are hopeful that in the second half that should be playing out.
Sure. Thank you so much.
Yeah.
Thank you. The next question is from the line of Hiral Nandu from Kalpavruks Capital. Please go ahead.
Thank you. Congratulations for the good set of numbers. I just heard in the beginning commentary that you were talking about some data and...
Sorry for the interruption, Hiral sir.
We can't hear you. Can you come closer to the line, or...
Is it better now?
Yeah, this is better.
Yeah. So just wanted to understand, I heard about some Meta and Web 3.0. Is there some new line of business, and what is the revenue potential or future growth potential of that? Just wanted to understand.
So, yeah.
Here this is, right now, Web 3.0 and the metaverse is very much in the initial phases. Everybody is experimenting. The models, the business models have not been formed up, but it is something for the future. What we are doing, and we are obviously keeping our investments also to a minimum. It's a very careful, graded look in terms of what we are building. What we are doing right now is keeping Shemaroo ready for the future. So we have built our own metaverse called Shemaroo Worlds, which is all built in-house with in-house talent, and that is just kept ready, and we have launched it with GeoDive VR just a couple of weeks back. We are keeping ourselves ready. We are also in touch with Meta. Whenever their Oculus comes out, we will also be partnering with them. So it's a very initial phase. Right now, we don't have any revenue projections, any future. The business model itself is not developed. But we are keeping ourselves future ready. As and when this arena in the media entertainment space opens up, we will be ready to climb that bandwagon. That's what we are at the moment.
I'll just add to that, Hiral. If we look at the various phases of the internet itself, phase one was, text and images kind of a thing. Phase 2 has been about video, right? Now, phase 3 is a deeper immersive experience, which is, which kind of leads into the metaverse. And we believe that, there, or whatever we have understood till now, that the whole definition of entertainment can undergo significant changes with that kind of technology that Web 3.0 is able to bring in. And this is still the Web 3.0 itself is at a very initial stages of experimentation. So what we have done is, while keeping the investment as low as possible, trying to ensure that we, have a strong participation in that, so that, when the future arrives, we are not, and this has been a pattern for us. We were among the first 5 to 10 people to sign up with YouTube when it came in India, and that time our revenues were, we didn't know the revenue model because we were selling DVDs for 200 and 300 rupees, and YouTube said we will show for free. So still we were, we did not shy away from experimenting and participating, and that has helped us build today, the business where it is. And therefore, we believe that an early start on this will help us, to participate as and when this scales up.
Basically, keeping ourselves future ready.
Yeah, this is about being future ready.
Perfect. Thank you. That was my only question.
Yeah.
Thank you.
Thank you. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi everyone. Thanks for the opportunity again. So 2 more questions. So one question, Hiren bhai, we have always kept 18% IRR as the benchmark, and I think we have indicated that even for the new initiative, that is the benchmark, right? So we have invested 225 crore over the last 3 years. So if this benchmark, anywhere close to this benchmark was to be hold, we need to generate, next year, 50, 70 crore kind of a profit and then 100 crore. So are we on track to that, or are we lowering our benchmarks, and what are the 3 or 4 KPIs that you guys internally look at, when you invest such a large amount of money? What are the 3 or 4 key things that you need to see to continue to invest? Can you talk a bit about that? Because we don't have any quantitative information on this. So please elaborate on that.
Yeah. So the TV business is a long gestation business, and this we have stated many times, and I would repeat that again. This business will take in investments probably for another 4 to 5 quarters before it really stabilizes and turns cash positive. Is again something that we have been talking of. Now, what is the potential of this investment, of this business? What are the KPIs or ROI drivers over here? I think there are multiple. Firstly, the operating leverage on this business is tremendously high. Once you've crossed break-even level, your investment doesn't grow, but the revenue, additional revenue kind of throws in huge amount of profitability, or it's highly EBITDA accretive or margin accretive. Secondly, this business working capital cycle or the financial gearing of this business is completely different from the trading business, because there is a much shorter cycle of so in this business, once it is in a cash flow positive kind of situation, it would throw up cash and lighten the balance sheet overall, which helps to reduce the overall helps change the overall balance sheet nature itself. Thirdly, and I don't want to quote any specific player over here, but to give you an indication, tier 2 channels, tier 2 GECs, which are not tier 1 GECs, tier 2 GECs which are well established for more than 8-10 years, their annual revenue at a channel level itself is upwards of 400 crores. In fact, in the range of ad revenue is in the range of 400 to 800 crores, with EBITDA margins of upwards of 25%. In fact, one of the channels we know is actually has a EBITDA margin of more than 50%. Again, it's linked to the operating leverage that the channel is able to derive from this. So, that is the in a way, I won't call it full-blown potential, but that is an indication of what kind of business potential this business really has. We are in a fairly, I would say now, good stage to take that next leap forward once we are able to stabilize on this whole new content creation pipeline. So some of the numbers you are saying, I don't want to comment on that. I thought I should give you a little different qualitative perspective on what potential this business holds.
Okay. Just one request, Hiran bhai, if you can share, and I've made this request earlier also, if you can share GRP, TRP data, which is anyway known to the industry, but because it is under subscription, if you can share that, it would give us some indication, where we are going. I understand you have started sharing the viewership share. But if you can share that, that would be very helpful. And second question is with respect to, so let's say this year, last year there was no Shemaroo, Shemaroo Umang was on a very low base. And this year, I think Shemaroo Umang will have a full base. We have also started monetizing Chumbak. So going forward next year, if the ad race doesn't improve and it remains, market remains subdued, demand is bad, but we need to continue to invest in original content. So that will mean that we may not have a top line growth, but we still need to invest in the content. So again, the margin will be under pressure. So do you foresee such scenarios when you build scenarios? And if so, what are we thinking in terms of countering such risks?
So in the short term, for a 2 or 3 month, that kind of a scenario is possible. Okay, but I mean that kind of a scenario for us, I would say, will not be status quo kind of a thing. We will, I mean, there, as I said earlier also, at the beginning of your question, and in a way, it's the same, similar question, differently I want to answer, or actually the same answer, is that we are mindful of the bottom line and the cash flow, in this situation. So we have been, as I said earlier also, we have been pulling off non-performing shows and, bringing down that cost structure. So there are various levers that we would, kind of push around to ensure that investment is maintained also, and still the investment doesn't go out of hand. But yeah, in a quarter, things could go here or there, because anything that you take a decision also for it to fully play out and actually show up on numbers and all that does take a good 2 to 3 months.
Okay. So basically, on a yearly basis, if you see such scenario, you may recalibrate your investments, what you're saying.
Yes.
Okay. And the last, if I can squeeze. So if I look at the new channels that you are planning to launch and create a bouquet, so if I see the positioning wise, you have a very large content of Gujarati titles, Gujarati, nataks, Gujarati drama, a lot of such things. So don't you see any white space in the, the channel side of it, in that space? Isn't it a natural course for us to kind of, capitalize on the opportunity at the lowest cost?
You mean to say to launch a Gujarati channel?
Yeah.
It is one of the options and opportunities. I right now wouldn't want to comment on that. It is an evaluation.
Just like you, the way you think, we also can see that. But hence, it is part of the evaluation process. But there are various other things also one needs to keep in mind. And I'm not saying no or yes or anything. It is part of the evaluation process. But there is a natural affinity for the content that we own and possess. Yes, you are right. But in terms of market and future growth potential, all that is baked into our decision-making process, and it is not ruled out, but it is not something that is on the immediate horizon as well.
Okay, got it. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Hiren Gada from Shemaroo Entertainment Limited for closing comments.
Thank you everyone for joining in on the Q2 half-yearly FY24 earnings call and listening patiently. Looking forward to seeing you all in the next quarter. Have a great festival period. Happy Diwali, Happy New Year, prosperous New Year to everyone. Thank you.
Thank you. On behalf of Shemaroo Entertainment Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.